Well, Dariusz Kowalczyk is Chief Investment Strategist at SJS Markets. He joins us now live from our studios over in Hong Kong. Dariusz, it's great to have you with us today, especially on such a busy day. We are expecting to hear from the Treasury Secretary, Timothy Geithner, in just a few hours from now. I mean, clearly this is a man that does have some, I guess, work to do on repairing his reputation. What are we going to hear about this bank plan?
Investors will focus on details regarding the government capital participation, both in terms of security purchases and purchases of loans by the new FDIC body, as well as the terms of financing for the private capital that the Fed is going to provide. But equally important will be access to information that the private investors will have regarding the assets that they may choose to purchase, as well as any restrictions on these private firms, such as in terms of bonuses. And this is, for me, a key problem. The political climate in the US may make it relatively difficult for Geithner to offer a package that gives enough freedom and support for the private sector to make the plan a success.
Oh, it certainly is a very difficult climate, especially on the political front, Dariusz. But tell me, what's it going to take to actually make this package work and do what the Treasury hopes it's going to do for the markets, really free up some credit there and kickstart lending?
There are two key factors that need to work well. First is to achieve large participation of private capital so that there is a good chance of these toxic assets being actually removed. And this requires generous financing terms and lack of restriction on the part of government in terms of how the firms will operate and reward themselves. And second, after the toxic assets are removed, we can expect that the capital holes on bank balance sheets will increase. And the question will be, is the government prepared and capable of providing enough public capital to plug in these holes? And the answer there is definitely not clear, because Congress may not have appetite for dishing up more public money to support the banking sector. So even if the toxic asset plan itself is successful in removing those assets off balance sheets of US banks, it will still not mark a complete turnaround, because there may not be enough capital to recapitalize those banks, and then lending would not restart anyway.
Dariusz, what's the strategy for dealing with this news that we're going to hear, like I mentioned, in a few hours' time? I mean, clearly you could look at the banking sector. We're seeing gains in the banks across Asia, but interesting to see that regardless of this package, you still believe that there's much more downside for this banking sector.
Exactly. I think that even if we assume success of Geithner, then the overwhelming need for more capital from the US government for US banks means further dilution of private shareholders. So I believe that prices of US banks will have to fall. If Geithner is successful, the overall market may start to move higher on hopes for a faster recovery of the US economy. But I believe that US banks have rallied by far too much over the past 2 weeks and are in for further steep correction.
All right, Dariusz, thank you so much. I'll get you to stay with us. We're just going to go to a quick break now. That's Dariusz Kowalczyk, Chief Investment Strategist at SJS Markets, talking to me there, and we're going to continue our discussion with Dariusz right after this short break, so don't go away.
Learning when to jump into a market and timing when to get out is what Forex is all about. Every day, millions of technical traders around the world study Forex price patterns in pursuit of the perfect entry and exit points. The hard part is understanding what the pattern means and why it's causing the market to move. To help you, we've created IBFX University, one of the most comprehensive Forex education sites on the web. Stop by for a class. Learn to trade with the #1 rated foreign exchange broker, Interbank FX.
truly Asia.
Grind virtually any kind of food waste into an unending source of electrical power for a city? When Emerson takes up the challenge, it's never been done before, simply becomes consider it solved. Emerson.
Wherever you work, wherever you watch, join the global conversation. Live from 5 continents. Worldwide business. Worldwide investment. Worldwide exchange.
Well, Dariusz Kowalczyk is Chief Investment Strategist at SJS Markets. He's still with us. He's joining us now live from our studios in Hong Kong. Dariusz, let me ask you about some comments from Obama's administration over the weekend, essentially saying they're incredibly confident the U.S. economy will rebound within a year. In fact, the comments were the U.S. will bottom out this year and will actually be growing again by the end of the year. Now, is this overly optimistic, or do you think they have it right?
Actually, I believe that there's a good chance for the US GDP to begin expanding in the third quarter of this year already. But much of that expansion would come from the fact that the contraction in Q4, Q1, and possibly Q2 is going to be so steep that at some point you do get a recovery, such as in housing starts and building permits that we saw recently. Simply at a certain level, you are so weak that some strength on a rebound sort of factor is normal. And also, by the second half of the year, the huge fiscal stimulus is going to start pumping through into the economy. So I agree that in the second half we will see the beginning of growth, but still, overall in 2009, the US economy will contract by at least 2%.
We saw these huge amounts of weakness in the greenback, of course, over the last trading week. I'm very interested, though, to hear that your recommendation now is actually to be buying the dollar.
Exactly. I believe that the weakness in the greenback that was caused by concerns over debasement after Fed tripled its initial plans to purchase various forms of US debt, that I believe all of this is already priced in. And at this point, we are looking at a comparison between a dollar and other currencies whose policymakers are doing much less to support their growth. And as the US economy becomes the first to begin expanding, this is going to provide a boost for the greenback. So I think that it's a short-term buy against other majors, and that by the end of the year, we are going to see it trading at 1.32 against the euro and 99 against the yen.
All right, 99 against the yen. All right, Dariusz, let's move over to Asia side now and talk Japan. We, of course, had the government last week talking about the jobs package. We're going to get a lot of data out this week. We've got the trade balance, we've got CPI, we've got retail sales. What are these sort of numbers going to look like? I mean, is this going to be more of the very dire news that we've been hearing out of Japan over the last few weeks and months, in fact?
I'm afraid that as far as Japan goes, we have to get used to a pretty prolonged period of very negative data because of the delay with which both fiscal and monetary policy there is being tailored to tackle the very sharp recession in which the country finds itself. So it's very likely that we are going to see not only negative but disappointing numbers this week. And it will be one of the factors that I think is going to weigh on the yen. Overall, for the whole year, Japanese GDP is going to contract by at least 4 percentage points, possibly more. Unfortunately, the country has to wait for the US to emerge from recession and with some delay see benefits from a recovery in US imports for Japan to start growing again, which will not happen until 2010.
All right. Okay, Dariusz, thank you so much for joining us today. We are out of time.
Thank you for having me.
Dariusz Kowalczyk with me there, Chief Investment Strategist at SJ Markets. Just ahead, we're going